Good morning, everybody. How are you doing? Welcome along to FTUK's Thursday London Open live stream. Hope everything is well with you and you've managed to have a good trading week so far. Definitely an interesting week in the markets, and this sets us up very, very nicely with everything that's happened into non-farm payrolls. Of course, this is Fundamentals Week at FTUK, so you can grab yourselves a free audio squawk for 14 days from our proud sponsors. We are proudly sponsored by Newsquawk and the Trusted Prop all week, and yeah. It's going to be an interesting day today because it's also Halloween. It's also month end as well, and that means month end flows. So it can get a little bit ragged, but we'll touch on that in the US stream in a few hours' time. But what we need to do first of all is just give a quick sweep round and tidy up what has been happening overnight. And we will start in China. Because the NBS manufacturing PMIs have been printed in China, and that rose to 50.1 in October, and that was from the previous reading in September of 49.8. So not a huge amount, but the point is it where is the lean? That's inflationary. It's a positive story. Now that's very interesting considering the news we had out of China a couple of days ago, which is basically said they were going to flood the system with cheap money if Donald Trump wins next week. So you've got you've got a recipe for inflation. So the whole argument that the inflation cycle that we've been on since COVID-19, it's not dealt with yet. We've got that sticky service sector inflation in the UK. So I could see inflation making a comeback next year and needing to be dealt with. So the idea that we're going to just drop rates to back down to where they spent the last 10 years, I don't think that's valid at all, you know. So things like that can all fit into that jigsaw picture. Yes, it was the first rise in factory activity since April, with output growth hitting a 6-month high while new orders stabilized. Meanwhile, confidence notched to a 4-month peak. So that word confidence is massively important. There's a video on the YouTube channel I did the other day looking through the Financial Times, and that was the first article on the front page. I think it was from last week sometime, all about sentiment and confidence and where it is. And you can't get away from the fact that in markets, everything is about how you feel, and you make decisions based on price action, but you're always making decisions on, well, I think it's gone too far now. Oh gosh, this is going up, so I better join in before I miss out. That kind of thing. How you feel, your sense of confidence, it drives absolutely everything. That's why human instincts are involved in markets. So yeah, worth paying attention to. Let's move on to Europe as well, because we've got data out of Europe this morning. I think it's inflation data. We have got Christine Lagarde. She spoke to the French paper Le Monde yesterday, saying that they reaffirmed that lowering of rates will continue. They're going to carry on with that process. Remains prudent on the outlook for inflation. Our goal is in sight, but can't say that inflation is completely under control. The sequence of rate cuts will be determined by underlying economic data in the coming months. Not expecting a recession in the euro area. Cycle of higher salaries and inflation is expected to persist. So there you're getting, we're cutting rates, but they're expecting that sense of inflation baked into the system to stay there. I've got no reason to think that is wrong at all. I like Christine Lagarde. She gets a lot of criticism. And certainly the ECB has a different way of doing things than the Federal Reserve and the Bank of England. But nevertheless, it's definitely important to listen when she's got something to say. Quickly on the United Kingdom, obviously we had the budget yesterday. We're not going to go over that again in detail. What's done is done. Ragged session on the panel. We will look at the price action. Goldman as well, they've forecast that the Bank of England will keep rates unchanged in December versus their prior forecast, which was to cut 25 basis points. So obviously, given what's happened with the budget, they've now revised their forecast for the Bank of England moving forward to the end of the year. So let's have a quick look at the pound, just so we can see what that day mapped out like, because, bear with me a second. There we go. I've got my charts in front of me now. This is the pound here. Now, this is the pound against the dollar. So you can see how ugly yesterday turned out to be. I got to be honest with you, I was surprised by the market reaction. I actually genuinely thought that we would get more of a directional move, but definitely not. That's not the way it painted out. So here's the problem for a lot of traders now, is that you had all the bears getting short just below this swing low here. They get short and then they sit back. Wonderful. I'm on for a nice runner here. And then, of course, the price action gets scooped back up later in the session and we get pushed to the other side and we just basically wash out both sides. That is a very key hallmark of a market that's starting to thin out a little bit, and the pound has been thinning out, and therefore the ranges start to widen. And what you do is, you instead of getting an environment of where the market is contracting, you're getting a dynamic where the market is expanding, and that is a broadening pattern, a broadening formation study, or Edwards and McGee technical analysis. And it's there's an amazing chapter about broadening patterns in there, and they are actually my favorite charts patterns, because if you are that kind of a chart pattern trader, because one of the good things about it is you get sweeping moves, so you get distance, which you need. You know, if the price doesn't move on this y-axis up and down, you can't make any money. So markets just never move on the y-axis. You can't get anywhere. So the great thing about a broadening formation, if you can get into them, is that they do supply some fantastic opportunities. But you've got to be looking out for them, and you've got to make sure that you're in tune. The second thing that's really good about broadening formations is they give you a long time, because the further it develops, the longer you've got to sit and watch and evaluate and make a decision. So here's the trick with broadening formations. You can see it on the 1 hour here, and look at yesterday's expansion of volatility as we swept out one side and then swept out the other. Now, the key thing now with the broadening formation from here is the 50% line of the initial swing. So you can play around with the exact way you want to place the lines. I mean, that's okay, you can do that. But if we were to just take from where I've drawn it here, we can know that, and I'm just going to get this in here nice and tight. Let me just turn off my magnet. Whoops, that one. There you go. So I've demarcated my 50% area of that initial swing, okay? So I know it's around about 129.70. Now that's the line that you want to project forward. So just, I don't know if there is a tool in TradingView that will do this for you. There probably is, actually. Just change that to the style of that so it's a dotted line. That is my line in the sand for the session on the pound. Absolutely no question. Why? Because as a broadening formation starts to come to the end of its evolutionary cycle before it's going to break out and do something else, the midway distance that we project forward, and you can maybe use an Andrews pitchfork here to make this a little bit more precise. I mean, that's a fascinating area of technical analysis as well. But that area as we project forward, I've got it roughly right there. Basically, the theory is that line should hold. Once we then start to move in that direction, we should be holding that area. We shouldn't be spending too much time in the latter stages of the pattern formation, washing around here and washing in around on the other side. Once it's decided after swings 4 or 5 or 6, however many they are, and we've got quite a number of swings in there, this should become more of a difficult line to break, and that is your leading edge in this type of chart pattern, because you take the height of the pattern, whether you're bullish or whether you're bearish. I mean, I'm bullish, but whether you're bullish about it, you take that and you project that now to the upside from the break, your height of your pattern from the break of the pattern. So that gives you a really nice area to aim for, to the top and to the bottom. And you don't even really need to have a bias on direction, but you can play that kind of a pattern. It's a phenomenal area of technical analysis. So yeah, I mean, I know we're talking fundamentals this week, but this is, we can connect the fundamentals with the technicals. That's the thing. They don't operate in isolation. It all operates together. So you take your fundamentals, you understand what's going on, you understand the driving force in the market, and then you use your technicals and your strategies to then start to improve your ability as a trader. So yeah, really, really fascinating stuff on the pound. But I had hoped for a bit more of a push on direction, but we could maybe potentially get it. Maybe that's going to happen after non-farm payrolls tomorrow, because obviously don't forget that the second leg of this currency pair, of course, is the dollar, which will be moving with the non-farm payrolls tomorrow. Okay, right, yes, a bit of a deviation into the pound, but let's move on and carry on with our sweep round from what's been happening overnight, because obviously we talked yesterday in the US stream about the rate decision in Japan. No change, absolute nothing burger. No one was expecting anything. This was definitely a case of fingers on lips, just keep your head down and carry on as normal, as if the election didn't happen at the weekend. So the Bank of Japan, they're definitely not going to be swayed by the election results. So the short-term rates in Japan have remained unchanged. changed at 0.25% as expected, and of course that was a unanimous decision. So there you go. That's the confidence that's needed in a market like that at a time like this, no question. Given that real rates are very low, at very low levels, we will continue to raise rates if the economy and prices move in line with forecasts. Underlying CPI will likely be at a level generally consistent with a 2% target in the second half of the projection period from the financial year 2024 through to 2026. So basically everything's in line, everything we're expecting inflation to stay there, and we're expecting our projection of it to be maintained. So what you've got to remember as well with central banks, what they always do is that they always want to forecast the future. So today, what do you think inflation is going to be in 6 months? You say, okay, well, I think it's going to be, I don't know, 2.5%. Okay, now, some data comes out over the next couple of weeks, and then the journalists ask them again, you know that forecast that you said about 6 months' time? Are you going to revise that now based on this data? So you don't only deal with the data that you've got. All of these economists and these guys, what they also do is that they also then project into the future, and they basically then get asked a question of whether that revision is going to change. So that's the kind of dialogue that gets wrapped up in these statements. So it's actually not that complicated. It's what do you think it's going to be in 6 months, 2 weeks later? Do you still think that it's going to be 2.5 in 6 months? Oh no, I'm going to revise it up, or I'm going to revise it down. Expectations, projections, that kind of thing. So the Japanese yen, obviously, the Japanese yen has just strengthened a little bit, probably just needing to, with a touch of stability and confidence created by the Bank of Japan. Let me just go back over to the charts and we'll have a look at that. Just on the 1 hour, we're just touching the 200 SMA. Basically, we just closed at the bottom of our weekly range so far, and we have also we've closed at the bottom of the range, and we've closed the gap that we started right at the beginning of the week. If you remember, we started up here and we opened the market on Sunday night here in the UK in those late 152s. All we've really done is close that. You know, I was still expecting this area of support to be a bit of a thing in tomorrow, and that maybe gives us a nice buying opportunity on dollar yen over the next 24 hours. Who knows? We'll see, unless something seismic changes in non-farm payrolls tomorrow. But that's looking quite nice. You know, these little areas of resistance that we painted in yesterday done an amazing job of just keeping the market contained, as you can see there. In fact, let me just put it onto a daily. Yeah, I mean, the 200 SMA here on the daily as well is down at 150 at the moment. So that could be, and that's a big round number as well. So that could be a bit of a magnet over the next over the next 24 hours as well. So we could get a little bit more of an extended move to the downside here in the Japanese yen before we then base out. But, you know, this, for me, like I said before, it's all about having a line in the sand, and it's still the same for me. So we've got 150.74 area is the key area that I will be wanting to just make sure gets held if we're looking for this trade to continue. But yes, okay, let's move on and let's talk about... this is important as well. This is just extra bit of context from Japan as well. This is the sort of thing, it's not a market mover, but as a trader, you always need to understand any shifts in the geopolitical landscape. And this as well, overnight from the defense minister in Japan, condemning North Korea's missile launch. Obviously, there's nothing new in North Korea testing missiles and flying missiles and, you know, trying to just, you know, fly them too close to where they should potentially be. There's nothing new in that. But when it happens, you need to know. It's not a market shifter, but these things, they can escalate very quickly. And, you know, in an area of the world like that, there's a lot of tension sometimes between the Japanese and the Chinese and Taiwan, and it can be a little bit complicated. So you just always make sure that you understand when stuff like that is happening, in case something changes. That is a very important bit of of understanding the fundamentals as a trader. Finally, as well, let's look at the Middle East. And the Middle East, this is from the Lebanese Prime Minister, who has said that they hope for a ceasefire with Israel in the coming hours and days. That can be contagious, as in like ceasefires. That's a good thing. Let's roll that out in other places as well with the rest of the conflict that's happening. I think that's a good thing. the Israeli public broadcaster as well said that they are publishing what it says is a draft proposal of a Lebanese ceasefire deal. Yeah, that's a good thing. So again, we just keep an eye on the crude oil markets over the course of the next 48 hours in case that as a story that escalates, and let's hope it does, because peace is a good thing obviously for everybody in that area, and the markets should view that kind of thing as being positive as well. Let's now talk about some of the big guns for today. We've got the core PCE inflation index. The Personal Consumption Expenditure Deflator, to give its full title. It's a measure of inflation, and this is I'm a big fan of this. I think this is a very, very cool measurement of inflation. This is if you don't really understand inflation and you don't understand how all of this stuff fits together, it can sound really overwhelming, and it really isn't. And I'm going to do a very simple, basic explanation which will explain to you how it all works. So the United States measures inflation in a particular way, and they've done that now for a long time, and I'm going to explain the reasons behind that. So this box here that you can see, I've just crudely drawn some boxes on here. If you imagine that this is how we measure inflation, so imagine that's a box, and what we do is we stick all of the price of everything into this box. So we take all our goods, we take our bread and our milk, and we take the price of your clothing or your shoes. You take all of these prices of things that we all consume on a day-to-day basis, you stick them in a box, you add it all up, you average it out, you give some things more of a weight than others because you need food a little bit more regularly than you need other things, so you do that, you stick it all in a box and you add it all up, you come up with that number, and that is the price, that's how much everything costs, and that moving up and down gives us our sense of inflation. In a crude way, that is basically how CPI works, right? That's the generalized measure of inflation. Certainly the Bank of England still use CPI, the Consumer Prices Index. Now that's set in stone every year. They kind of make some adjustments to it. Maybe bread has gone up a little bit or down a little bit, or maybe the fashion for buying technology has changed in some ways, and so we don't really need that in the CPI anymore. So they'll make some adjustments, and they'll make some adjustments in that bucket every 12 months, basically. And then that's it. It's set. So inflation is measured against the price and costing of that throughout the course of the 12 months. Now, there's a school of economics that says that is too slow, because by the time you're getting towards the end of the year, what if things have changed? And one of the things that changes fast in markets is consumer behavior. Because all of a sudden, interest rates go up and you haven't got as much money coming every month. Your family will suddenly change its budgeting requirements that weekend. Yeah, so all of a sudden we used to go out for a meal every weekend with the family and spend some money in the local economy. Well, we're not doing that anymore. We've got the mortgage to pay. Yeah, so the consumer changes fast, and the theory is that with the CPI reading of inflation, it's too slow, so it becomes outdated, so it's not as accurate. So the reason why the Federal Reserve prefer the CPE measure of inflation is it morphs with the consumer. So they update it very, very regularly. I'm not exactly sure if it's every month, but it is updated. It changes with the behavior of the consumer. So from month to month, you'll see the weighting and the pricing within the reading has actually adapted. So it's adaptive, so therefore it's faster, and therefore it's considered to be more accurate, and that's why the Federal Reserve use this measure of inflation. I don't know why more central banks don't use it. I think it's still, I think it's a very, very smart way of actually doing it, and it gives you accuracy because that's what you need in markets. So we're going to get the PC readings today, so you have to pay attention because the markets will pay attention, and the markets are paying attention because the Federal Reserve is paying attention. It's as simple as that. So we are looking for, the market is expecting the PCE to have just moved up a little bit from 0.1 to 0.3. That is what we are expecting today from the PCE. So yeah, I think it's got a it's going to be an important one to be across, given that we are moving into non-farm payrolls for tomorrow. Also as well, we have got on the menu for today as well, we've got the Euro area inflation, the core inflation, and then also unemployment as well. The core inflation 1.7, and we're expecting that to just move up slightly as well. So pay attention to those Euro dollar markets as well over the course of the next few hours. So that is pretty much it. Now I've got a comment here from Beacon 4. asking Beacon's just saying, oh, can we review the payout? Absolutely. As soon as we get off the stream, I will make sure I look into that for you to make sure that the payouts are going out. If you had to wait a little time for that, so don't worry about that. I will look into that for you personally as soon as I finish the stream. Okay, now, finally, I think that's it for the session for today. Just so that you are all fully in the loop as well, we are now into the area of non-farm payrolls, which is coming up tomorrow. This is what we've got on the menu for tomorrow. We're looking for quite a dovish print in the jobs reading, 115 from the previous 245. Now, it's going to be difficult because of all of the mix of data that we've had from the jobs reading so far. We've had an aggressive ADP, we've had a dovish JOLTS reading, so we're going to break all that down and start to talk about that in tomorrow's stream to get everybody set up for non-farm payrolls, average hourly earnings, and of course employment as well. That is going to be important. Now, bear in mind that we will be on YouTube at a slightly earlier time in the UK. So if you rock up at 1:30 tomorrow in the UK expecting non-farm payrolls, you will have missed it. So we're going to be on it because the clocks went back here in the UK. So it's going to be 12:15 here in the UK tomorrow, and that of course is 8:15 Eastern Standard Time in the United States. So it's going to be a good one. You've still got time to get involved in our non-farm payroll draw as well. All you need to do is head over to Twitter, look at our Twitter handle on there, and you'll see all the rules as well. You can win a 10K account and a 3-month subscription to Newsquawk, their audio squawk service, which is absolutely an amazing deal. So yeah, just it's free to enter. Just put your guess in for non-farm payrolls, and the top 3 people that are closest to the number, they will obviously win the accounts. That's everything we've got for now. So have a good European session, and I'll catch you all in a few hours for the US Open.